Good morning, everybody. Welcome to the Flow Show. It's Friday. We're there. We've done it. We made it through yet another week into the third month of the year already. Time flies when you're having fun. Morning, Mr. K. Are you having fun?
Thank God it's finally Friday. I had this feeling for the past 3 days, so now I can say, like, here we are, it's Friday. Morning, Ryan. Morning, everybody. Having fun is not really the right description of how those markets are right now. It's very much wet finger up in the air, it seems.
Yeah, very much so. Very much so. Plenty of moves to talk about, no doubt. We'll get through all of those. Let's start off with some data coming in, starting off in China. Well, let's start off in Australia since it's top of the list. It's a PMI day today, so we're getting all those rolling in. Australia coming in a pip above expected, still in negative. Over in Japan, that came in unchanged. Their final number there, 47.2, so still soggy there. China, bit of a differing story there. We got both numbers out, both the National Bureau of Statistics number, that's the Chinese bureau there, posting manufacturing coming in a pip less than last month. So that one's still in contraction. The services number, though, improving, coming in at 51.4, so tickety-boo there. And then the private survey there from Beijing, 50.9, so a pip improvement there. So manufacturing front, a bit mixed, hovering around that 50 line, one below, one above. We had BOJ's Ueda out, seemingly bringing his big knitting needle to burst a few bubbles, hawkish bubbles that Takata put out yesterday. It says inflation is easing at a quick pace. That was a bit of a worrying comment. It says Japan's economy is expected to continue its gradual recovery. The economy is not yet in a situation where sustained achievement of 2% inflation can be foreseen. He said he cannot see yet that the inflation target is met. It says wage negotiations will offer a tailwind. Says the Q4 GDP data was negative, but the economy was likely flattening after strong growth driven by the reopening from COVID. If spring wage talks lead to solid results, consumption is expected to recover. So a bit of a brush off of the poor Q4 numbers. Expecting things to pick up in Q1. Was a bit dovish, a bit of a counter, wasn't it, Kay?
Yep. Seems like he perhaps didn't like what Takata said the day before. But he keeps his line, right? That is what his line has been. That is how he's evolved very slowly. And that is how he looks at things. I guess that brings us back to March being a real surprise if they do something right. So the base case is strengthening again for April, I reckon, and that's about what we can get out of it, can we?
Yeah, I think so, mate. We had Economy Minister Saito saying that they're asking smaller firms in the supply chain to seek price hikes. So that's one of their big worries that we've been mentioning here. It's okay for big firms to hike wages, but it's the smaller firms that need to play ball as well and make sure they're not going to get squeezed out by the big producers. So the government's well in play there, speaking to those smaller firms, getting them to see if they can get prices up, wages up as well in line, offering incentives, as we mentioned several times previously. RBNZ's OR has been out a few times this week since the meeting. Not much change to the comments that we've heard already. Says policy needs to stay restrictive for some time, and they expect to start normalising policy in 2025. So that probably shuts the door on any further hawkishness. I haven't seen any of those bank changes yet. See if how they've got the Tipex out to those that were calling for 2 hikes this year. We'll wait and see what those do.
Yeah, they did.
Coming over. Yes, mate.
Yeah, some did.
Some did. Who changed?
Yeah, well,
ANZ. It was ANZ and TD.
Yeah. Well, no, I didn't see those, but I think the other ones, they just went like flat and trying to keep the rate cuts further out. That's
Yeah,
I saw some, but
cool.
it's just another game of yeah, taking out the T-Pex and change your views a bit.
Yeah, and then wiping the egg off your face. Right, coming over to the Eurozone, we got a ton of data coming out as well. PMI day over here as well. We got, well, start off in Spain. Well, we'll start off in Switzerland, you'd like. Retail sales in there coming in a little softer than expected. Spain was the bright spot of the Eurozone in the manufacturing PMIs, 51.5, moving into expansion, looking good there. Italy missed expectations, but did still put in a gain over last month, but still in contraction. France as well, same thing, bit of an improvement, beating expectations, definitely beating last month, but still negative. Germany as well, not much change there, 2 pips up over the flash number, still well below last month's number, so problems over there still well entrenched. Eurozone, pan-Eurozone number there, a little improvement, 46.5, but as you can see, all in the negative. UK as well, a little bit of an improvement over last month and over what was expected in the flash number, 47.5, but yet still a negative. Then we've got sticky CPI in the Eurozone. Headline CPI coming in at 2.6%, was expected to fall 3 pips to 2.5, so it came in hotter than that. The all-important core only dropped 2 pips, was expected to drop 4. So very much sticky there. That's probably going to get the ECB hawks out and squawking that April's off the table. It's too early for cuts, to talk about cuts and blah, 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 bumpy road and jobs not done and all that palaver. So we can expect those floodgates to be happening anytime soon. We did have only one one that I noted, ECB member, that was yesterday, ECB's Panetta, saying that inflation is falling faster than expected. Obviously, no one gave him these numbers before he made that comment. Economists in a Reuters poll yesterday think the first ECB cut, or the majority of them, 2/3 of them, think the first ECB rate cut will come in June, but they were a bit split on whether the cut could come earlier or later than that. So just like everyone else, they haven't got a clue either. Coming back to yesterday's data, there was an awful lot, but we got those PCE numbers out the US, and they came in right on the money as expected. So confirming a drop in the headline PCE and a drop in the core PCE as well. So what that did, that washed out a bit of the thoughts from what the hotter CPI that we saw, the more sticky CPI data. There's more than a few people now thinking that that was maybe a bit of a one-off circumstances within that, to do with all this housing, shelter, and all that rents and all that palaver, distorted the numbers in CPI in January. Now, of course, there's some people jumping up and down on the PCE. The super core that a lot of people like to look at took off. Exploded, I think was the term zero hedge used, if I recall rightly. It might have been something else, but yeah, there's always people who's going to pick holes in it. So some people thinking that that data wasn't as significantly weaker as the headline numbers suggest. In the other bits and bobs, income was up 1%, spending was as expected there or thereabouts, so no real problems there, although real consumption was down 0.1%. So a little bit soft on that one. Jobless claims was all tickety-boo except for the continuing claims number, which just ticked into the 1.9 million. Not really a big deal at the moment. We've seen it fluctuating around that level, but we need to keep an eye on it. Those 1.8 millions where we sit in the high numbers rather than the low numbers. So just might be creeping up a bit. We'll keep an eye on that one, but certainly no red flags at the moment. Canada GDP, monthly GDP coming in flat, so not looking good there. Quarter on quarter, annualized, coming in at 1%, a bit better there than expected. So all okay over there. Chicago PMI looking a bit soggy as well. That's a manufacturing number there. Right, that's enough for the data. Enough looking at the data. Fed's Bostic says inflation came down much faster than he'd expected. Last few inflation readings have shown it is going to be a bumpy path back to 2%. Says it's probably appropriate to reduce the policy rate in the summertime. Fed's Goolsby, again, another one brushing the data under the rug, says even with January PCE data showing a month of rebound, we should be careful to extrapolate anything from that. We've had very substantial progress over a long-term basis on inflation. There's a risk of betting against the Fed being I can't even read my own stuff now. There is a risk of betting against the Fed being committed to doing what it wants or doing what it says. So a bit of a warning to the markets. Fed's daily, officials ready to cut when the data demands it. We have policy in a good place and can cut if needed. Then counters that by saying if we cut too quickly, inflation can get stuck. Fed's Mester, January PCE data was not too surprising. It does not change the view that inflation is going downward. There's little more work for the Fed to do on inflation. Can't rely on the pace of disinflation last year to continue this year. PCE data does not change the calculus on a policy rate decision. Right now, 3 rate cuts this year feels about right. Williams, Fed can take time to deliberate on the next policy move. The Fed is expected to cut later this year, but doesn't see a sense of urgency to cut. And says a rate hike is not part of the base case. The current outlook doesn't suggest a hike is needed. One place where rates are going up is US mortgage rates. They've risen to 6.94. That's upward for the 4th week on the trot, according to mortgage data over there. We saw the MBA numbers coming in a little bit soft again. So maybe those higher mortgage rates starting to bite a bit. And there's a lot of cheering in the streets of FX land because SMB's Thomas Jordan is going to step down at the end of September. I know Kay probably have a few words to say about that one or anything else we've got going on.
Yeah, it actually, when reading the statement of the SMB, it seems that they were as surprised as we are. Yeah, the market takes this as negative Swiss franc, but we should just keep our feet on the ground, shall we? Of course, he has been the engineer of a much stronger Swiss franc over the past couple of years, but he did abandon himself that idea at the end of last year, right? I do think that it gives the market this reason to speculate a bit more against the Swiss franc into the SMB meeting, as I already said, and also yesterday. We've had those Swiss manufacturers or Swiss companies saying that Swiss franc was still overvalued by about 5%. So that gives the market a bit more meat on the bone. I do think that it's reasonable that Swiss franc would weaken a bit more, also with the data coming out, which are not brilliant. So yes, but this news comes a little bit as a surprise to everybody, it seems, including themselves at the SMB. So he didn't really give too much reasons, just saying that he felt his job was sort of done there. But yeah, that's where we are. I'll be looking at a few rates later in the Swiss pairs because they are in break territory now.
Yeah, very much so. As I said in the room, it's no surprise he's decided to step down just as Bitcoin's rallied to the highs. We know them lot like to have a little trade now and again. So he's probably filled up his pension pot now early and decided to jump ship. Anyway, there's for those who are not in the know, you need to go back to the old SMB cap from years ago that went in play. Lots of fun and games in the FX markets when that was in play. You need to Google that one if you weren't around trading when that happened. Right, moving on. Anything else, come to your attention, Kate, before we move on? Looking at prices and whatnot.
No. The rest are just a bit of opinion pieces. No, I haven't seen anything else, mate. No.
Cool, no worries. Right, let's start our journey in the euro dollar, where I'm getting a little bit twitchy because we're coming down to this 108, 107, 95, 96 area a bit too often now for my liking. The bounces are looking pretty weak. So price action right now would suggest maybe we're going to see a bit of a break. If that happens, 107.60 is the next level underneath there. We'll probably find a bit of traffic around 80s as we often want to do. But that's my main watch level down there. If we do that, we're going to unwind even more of this trend that we've seen, this bounce from 107s, which won't be entirely positive for my longs that I'm still holding down off that. But we shall see what happens. But yeah, coming down here a bit too often, as I say, for my liking now. We had a few tickles down here, so any more we're likely to break through. Dollar yen got its trampoline on yesterday. I missed this level 149.20, tapped it pretty much on the screws. Not a huge level, but one that one of those watch levels I've got on my chart, and that's where it decided to bounce, and we had been all the way nearly back up towards those 150.80 highs. Couldn't quite get there. Now there is a bit of news going on again with this New York Bank Corp stuff going on in the US. I haven't read in the full bits and pieces of it, but the CEO or someone's resigning or leaving or something, but there's a few more problems underneath the hood apparently. So watch the KRE banking index when US come to town, because we may see a few of those worries starting to raise their heads again, which might be a bit negative for stocks as well. It shouldn't be a big deal, but at the moment the market hasn't got anything else to look at or trade too much, so it might try and make a big deal out of it. So watch the US Open when they come in trading, and particularly the cash open for stocks. Today is a day where we can look at gold and it's not trading at 2030, getting a little bit of a push up. You seen any headlines behind this gold move, or was it just a general bit of risk? Or
yesterday was yesterday. Yeah, it was yesterday. Yeah, on the PCE data, all of a sudden it started to go up. We did see a bit of pressure on the yields as well. If you look at the yields are a bit lower, and the market just jumped on gold. I haven't seen any news related to it. Let's put it that way. But it happened after the US data yesterday.
Yeah.
And
so
but yeah, it's clearly breaking a little bit up now from the range we were trading in. And
yeah,
perhaps also helped by those mixed, still Chinese stuff going on. Not especially the data wise, but we see that dollar China is very stable, but not giving up anything. Is it them also underpinning it again? Because we saw the move up and then coming back down a bit in gold later on once the move was done, but then early morning and it's pushing higher again.
Yeah, and all this gold move sort of happened. This lower move happened when the Chinese were off, and now they're back. Maybe they could be picking up their purchases again. But we are in this 50 levels a bit again. It's another one of those just watch levels. It's had prior action, going back late last year. It's having a bit of action here at the moment, so it's not a definitive break as of yet. But if we do start to see it building above this 50 area, then maybe we're going to get a look up towards that 75 area, which was, if I can go back, which was this big massive level that we had before. So that's going to be the watch point again. This fake move that came all around the Israel stuff and all that business. So it was a bit of a blow off the top. I know Blake's been talking about blow offs for the last couple of weeks, but that was your gold blow off the top a bit. But I would expect this to maybe hold a bit of resistance if we get up there again, unless the news changes far more for the negative. This might be a little decent level. I might have a little sniff there for a short, just to play it against that. But yeah, we're definitely moving away from that 30 zone for once. Let's see if it's got any legs to it. As Kay was mentioning, in the yield space, 10s edging down, back down to that 420 area. Let's just zoom it in, which we've been looking at for quite some time. Well, for pretty much all the early part of this year. We had the bust up, it held, give or take, and now we're just edging down towards it. So this is going to be potentially key for the dollar moving forward, be it today or elsewise, particularly dollar yen. If we get back below 420, that's the market getting a little bit more bearish, dovish about the US. Twos as well. Just watch that in relation to the 3 cut mark, the dots, where that level sits. Again, a little bit of a rough guide to how the market is viewing that cut situation, whether it's starting to price more, price less, or just right, just like the 3 little bears porridge, just right. Kay, what do you got for us today, mate? Because watching a couple of levels, I've not got an awful lot.
Yeah, just coming back to that gold stuff. It's going on its own if you compare gold and silver. I can show it if you want, because silver is extremely stable right now, somewhere hovering in the mid 22s. It's not following this gold move, so I do suspect it has something to do. Well, I mean, perhaps with the Chinese buyers or other buyers, but it's something that is just gold related. You see, the gold. To me, we did well. We have been trading around there, but this is the move around. Yeah, it's a 4-hour chart, so this includes the PCE data. This is the move. Then we came back down, and then from very early morning we start to go higher again. To me, the 45, 48 was a bit of a level, in gold. So the fact that we're above, I think 2060, 62, we'll see what happens there. But if this is perhaps one to watch on this data this afternoon. If we get the ISM, imagine that prices would come off a little bit, or the employment index looks a bit soggy. This is perhaps one of the candidates that can push through a little bit, and it's going on its own, as I said. Its cousin silver is extremely stable in this 22 in this 22 zone. There's very little to do here on this one right now. I'm just trying to be very patient. So this is an interesting one, gold versus silver right now. Okay, so we need to look at those Swiss crosses there. We did it, finally. Thanks to Jordan hinting that he is, well, not hinting, saying that he's leaving. In September, the Swiss market took it as a negative for the Swiss, positive for pairs against the Swiss. And we've broken above the channel, finally. We've also, but that is now capped again. We've also trading around this 38.2 of the November into the end of the year. Decline, a hold above here, already above 95.5, I'd say, but a hold above here, and to close the week would be positive for a move back perhaps up to these high 96s where we left it end of November. And as we can see, the move is still, the overall move is still lower. So getting back here wouldn't be anything exceptional, all right? Because as from we were hitting early December already. Jordan said that that he thought the Swiss franc had run its course, and then this was the end of the year flows. So getting back up here wouldn't be anything extraordinary or excessive in my opinion. So this is a real possibility now. But we have to say that today on those European numbers, crosses are not really going anywhere on the euro. So perhaps we'll have to just be patient for this one. And then we have to look at dollar Swiss again, right? Okay, we have broken above the trend line, but as I was saying in the room, we could also argue that that we have been breaking above a bit of a triangle stuff and going up. Yes, okay, yes, we did it, but I would still like the prior top here for a starter in the 88.80s, and then especially the 61.8. I would like to see it go. And there, better numbers or small higher prints this afternoon in the US could do the trick. That is something that we watch now. I think it would be bad news. This has been watered down. This zone that was the prior important zone, but I can take it off. I'd say it would be bad news if we start to tackle sub level, start to get back sub levels where the lows were yesterday. So I know it's a bit away, but looking at the Jordan's decision and stuff, it would be a real setback if we get back below. Now, longer term, and this is going to be important for the weekly close, we are trying to enter the weekly cloud here. We haven't been in there since really 2022, right? So some people may take comfort of it if we would start to close inside, and that is really close to where we are now. It's around 88.47, call it 88.5. So this is where, or is it 88.54? 88.54 perhaps. Yeah, somewhere there. Call it 88.5. Okay. This is where it's going to get interesting to close the week and to start next week for the dollar Swiss. Of course, all Swiss pairs have been following the same move. This one is also quite interesting because we are trying to break above the prior high here. Yesterday, and I was quite unfortunate because I had a bit of a resting order to buy sterling Swiss just below 111, and I didn't get them unfortunately yesterday. But this looks to me like one also that I'm going to continue to monitor, because this could push, providing sterling continues to do relatively okay. This one looks to me like we could push a bit higher in the coming weeks or so. Could also be a very slow grind, because if you look at the stuff like euro sterling is still not moving. The cable is also having a lot of trouble making up its mind. We start the month bang in the middle of this triangle again. There's a load of levels, and at the same time, there's really not a lot to do, I think, unless we start to break below 126.10 this afternoon. Then we could have a bit of a look lower, confirm it through 125.90. This could be a move back down to 125.25, but I think it's going to take really strong US data to really take it down there. Okay. Being again a bit speedier pair than for instance euro dollar, this could be one that on slightly weaker US data could take back this 126.40 quickly, and then have a little run up to where we left it at towards the close of the month. But again, we've seen yesterday that there were like decent offers around there. So this one, don't expect too much unless the US data are really coming out of whack. Euro sterling is still really, there is a bit to do, and we know that. We've been talking about the 70-80 enough on the euro sterling. It's still capped, but we are not going any lower either. So yeah, it could be pulling higher. It could be, but this is just a very, very flat move that we have right now. So we're going to need at least one decent catalyst to break it either side in the future. What else? Yeah. Yesterday we saw this move towards the fixing time. We saw the move back into this 25-40 zone on the Aussie, and it rejected again. So that's still your top side zone. And just a small intermediate zone here. We have around 85.90. Okay, so that's something. Those two levels we may keep an eye on. 80 as well for the US data this afternoon. Get a move above 65, 40, 45. I think some may need to run because I do think the market is regularly trying to sell this level now. So I can imagine there are a few shorts hanging around in this one. And ditto in the Kiwi. I think it's the same picture. It's exactly the same picture right now. I know also Kiwi is pushing higher a little bit, but and OR is not helping the Kiwi, but it's really stabilizing, right? We are going to need something fresh. We're going to need to break 60, 70, 65, 70 here to continue lower. If not, then we perhaps towards the end of the week we are going to get closer again. But you know, the big break level will not be before these 61, 40, 65 again. I think nothing's changed here, really. Range traders are still on top. Quick look at the volatility. Yeah, nothing is really moving higher fast. So I guess that's it for now. Tonomex still hanging around the 17 level, just can't get away from it. And the dollar rand is not making too much progress, but it's keeping the I think the bias for higher is still there. It's not going to take too much of a beat on this afternoon data, I reckon, to retest this 30-40 zone. Okay, and with that, Ryan, back over to you, my friend.
Thank you very much, mate. Let's have a quick butcher's what's coming up because we got some decent data coming up today. Namely, the ISM is coming up this afternoon. The ISM manufacturing number. That's going to be the biggest one to keep an eye on. See whether it's going to keep well doing what all the rest are doing in manufacturing, staying in contraction. 49.5 expected. It's only a small improvement expected over last month. Keep an eye on prices paid numbers as well. They're still looking a little hot. And also employment. We got the jobs numbers coming in next week. So that will be important for analysts to put their thoughts together for what's going to come from the NFP. So that's going to be our data. These Michigan numbers are the final numbers from February. So they're just going to be the revisions. So just keep an eye on that a little bit. Soggy. We've seen a little bit of a run of some soggy consumer data of late. I mentioned it over the last weeks. You know, the retail sales report that we've got. The Michigan was a bit worse. The conference board consumer confidence was worse. Just some of the metrics for the consumer are starting to wave a couple of little yellow flags. When these things all build up, that might suggest that something is brewing. Maybe the consumer is finally starting to get a bit in the pocket from rate hikes. So it's just an area we need to keep an eye on. Durable goods was also a bit sucky as well, which falls into that category. So that keeps us going for the rest of the day. So we haven't got too much to talk about. A bit of Friday fatigue, I think it is. Dimitri got a question. Eurocross is taking a break before the next move higher. Depends which one. What ones you're talking about in particular, Dimitri? I mean, Euro Sterling. That's sitting there doing nothing at the moment, but it's not ready to go anywhere. Kay's lots of the other crosses. Sorry, mate.
Dimitri says Euro Aussie. Yeah, Euro Aussie 167. If that goes, then it's off to the races. But in the meantime, we are consolidating here. You know, I don't know. Yeah, we're sitting on a little bit of support. If you look at it, it's 166, 167 really right now, and then we'll see what happens. Start of
Chuck a
next
couple of
week.
lines in there if you like. One in there, bosh, and one round about there, bosh. And there you go. That's your area, give or take. So pretty clear, pretty close. If you get a move under this, then we're probably heading down. Up above 167, then you're probably off to the races. Or you can mess around in the middle there to your heart's content, Dimitri. Fill your boots, mate. Right, we should call it a day for today. Have a great rest of the day. Thank you ever so much for coming to the Flow Show and giving us your support here. Always greatly appreciated. Thank you to Kate as well. Likewise, much appreciated. Have a great day, a great weekend, and we will do battle again on Monday. Cheers all.
Cheers, guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.